Hello everyone, welcome to the third session on the basics on financial reporting and analysis. In this particular video, we are going to talk about a very important aspect because this is going to impact you in your jobs and professional lives. What are the different sources of information of an analyst? Okay, now the topic here is not covering what needs to be looked at, but the topic is actually covering where does the analyst find the relevant information. So we're going to really find out different sources using which an analyst can find out a particular information about a company. Okay, so some of the sources, the first thing that comes to my mind, should I say my mind also, is the annual report, basically the financial statement and the supplementary information. Now, financial statement obviously we understand is the balance sheet, P&L and the cash flows, and the supplementary information is any detail in relation to these three which has been given over and above. What is actually the challenge here is that it's only and only numbers. Okay, I am fond of numbers, but my challenge is that numbers communicate things quantitatively, not qualitatively always, and should I say all the time. So for that, for the qualitative aspect, I need to have some kind of a commentary being written. Okay, some kind of a analysis being descriptively written. This document written by the management disclosing and analyzing the business position is called as management disclosure and analysis. So as the name suggests, as the need suggests, it is not number oriented but words oriented. It's text heavy. While my financial statement will reveal what has happened, my MDA will reveal why has that happened. So it's a very good document to read, and I'm sure that those who are in practice, in jobs, or let's say in the business of fund management or something, must have already looked at management many times, MDA many times. So what does it contain? I mean, there are certain things which are mandatory, certain things which are recommendatory, but typically there is like a standard pattern which covers what happened in operations, what were the trends in sales and expenses. Similarly, what are the capital resources and liquidity, cash flow trends. I mean, what went up, what went down, what were the sources, which were the banks from where you had borrowed, why did you choose a particular bank over the other, what was the cost, etc., etc. Pretty useful information. What has been the general business sense, is the business picking up in the country, so on and so forth. What is the significant trends, let's say, for example, I'm talk about the mobile market, I mean the handset market. When Nokia was the leader, globally, using the type phone, and then Samsung was heavily investing into the touch screen technology, and obviously everyone said that you're kind of too much taking that risk, and Nokia deliberately did not do that. But look at what has happened. I mean, the trend has really changed, and today Samsung is one of the global leaders, I mean, overall, compared to at least Nokia. So I mean, those are the things that both Nokia and Samsung should write. The risk facing the organizations, what is the outlook, so on and so forth. So like I said, MDA is also called as the management commentary, because it's like a commentary, it's like a explanation given by someone, called as management, to the shareholders as to whatever happened, why that happened. Okay, so what was MDA should disclose? What is the effect of change in raw material? Obviously, raw material being one of the largest cost. Some of the off balance sheet obligations, any liability which is actually an contractual obligation, but you either deliberately or, let's say, because of some other issue, do not write it on the balance sheet. So you really show that as an off balance sheet item. Then is your futuristic expenditure and divestiture if material. I mean, futuristic as in, what is like the near term capex and all that stuff, and policies that are heavily dependent on the management judgment. So all I'm trying to say, this is like a good mirror of the management's intention and their capability and their performance over a period of time. Some of the other sources of info, again, some of them you would already be aware, are things like some of the SEC filings which you can get from EDGAR, which is Electronic Data Gathering, Analysis and Retrieval System. Now every company has to file different aspects into regulatory forms. Okay, the whole purpose of having a form is, like I said earlier, is to bring in standardization. so that at the time of usage, let's say you and I as analysts, if we download the annual report of Google and Apple, we find them in the same format. That helps me compare and analyze much better. Okay, rather than having rhetoric statements, which is non-standardized, let's have little more standardized aspects. So the idea of these forms is really to create standardization and increase the efficiency of the analysis. Now, in your books and notes, you would see that there are about 7 to 8 forms. CFA might ask a direct question, as to the annual financial statements are reported to stock exchange under option A, form 8K, option B, 10K, and 10Q, depending on what is like. So, all I'm trying to say is it is not to be taken lightly. Other forms of information are like trade journals, statistical reporting services, government agencies, credit rating agencies, corporate reports, press release, trade association data, so on and so forth. One of the important aspect is the proxy statement. Proxy statement actually is losing its relevance as the e-ballot is coming up. It's actually a substitute for that. What is proxy? If let's say there is 1 day, 1 hour kept for annual general meeting, the meeting for the shareholders. Now, in that meeting, obviously, if let's say there are, I'm sure that a sizable company might have 10,000 shareholders, but for a bigger company that number might be bigger. So all said and done, if let's say there are, even if 10,000 shareholders, how can one single day and one single hour be convenient for everyone? But that doesn't mean that shareholders don't want to vote. They still do want to vote. So what they do is the company issues them a proxy statement writing the key decisions that will be voted for. That means shareholders are already aware what's going to happen. And on those 5 decisions, the shareholder can write yes, no, agree, disagree for each one and then send that form to the company. So in a way, shareholder hasn't been present there at the AGM, but still was able to include his opinion in the entire scheme of things. So that is really a very good thing for corporate governance. Okay. So that was like quick thing on the sources for information of an analyst. So looking forward to speak to you in the forthcoming session. Thank you very much. This was Ankur Kulshrestha.